Common mortgage myths. For most people across North America, buying a home or property with cash is not possible. Because of this, banks and other lenders offer mortgage loans to those that qualify. A mortgage loan isn't a bad thing. It's a way for many people to be able to own a home. As with any popular subject, there are some common myths surrounding mortgage loans. While not every buyer will need a mortgage, it's important to discern the myths from the facts when it comes to modern mortgage loans. 20% down payment. This is one of the most popular myths surrounding mortgage loans, and it's also one of the most outdated. While it may have been a requirement many years ago, a buyer does not need to have 20% of a home's purchase price in order to qualify for a loan. While it may be financially better to put down 20%, there are a number of different loans and options that allow potential buyers to get a mortgage with less than 20% down. In the U.S., an FHA mortgage for first-time buyers requires a minimum 3.5% down. VA mortgages allow for zero down, USDA home loans require nothing down, and a number of other programs allow buyers to put anything from 3 to 10% down. If you're thinking of buying a home and you know you'll need a mortgage loan, don't be fooled by the 20% myth. There are many options available to buyers today. Pre-qualifying guarantees a loan. It may seem like the steps you go through to get pre-qualified for a mortgage loan will be a sure thing, but that's not the case. Pre-qualification is not pre-approval. Pre-qualification is the initial step in the mortgage process, and while an important step, as it can provide an idea of potential mortgage loan amount, it is not the actual approval. Pre-qualification generally only uses basic financial information and is not a guarantee of a loan. Pre-approval is a more thorough process that generally involves looking at your financial statements and credit report. Before you begin your home search, get pre-approved to ensure you're looking at properties that fall within your budget. Need excellent credit. There are a number of factors that go into mortgage approval, and while credit worthiness and debt-to-income ratio both are considered, you do not need to be excellent in either of those categories in order to get a mortgage. The minimum credit score necessary for a conventional loan in the U.S. is 620. For a traditional mortgage in Canada, it's 680. As for a debt-to-income ratio, while it's best to have as little debt as possible when looking to purchase a home, Fannie Mae and Freddie Mac, which are government-sponsored agencies that publish standards for conventional mortgage approval in the U.S., have the maximum allowable debt-to-income at 50%, meaning those with current debt are not at a loss when it comes to qualifying for a mortgage loan. Only get the advertised rate. It's often said, if it's too good to be true, it generally is. The same can be said for mortgage interest rates. When looking for a loan, interest rates will be listed online, in newspapers, and wherever else lenders advertise. Those advertised rates will be appealing to buyers, but the reality is that most of the time, advertised interest rates are only reserved for those who have a perfect credit score, have an incredible debt-to-income ratio, and are likely putting down a very large amount. Interest rates are influenced by a number of factors, which, of course, aren't included in the advertisement, just in the incredibly small fine print. Because of this, go into the mortgage loan process with the understanding that you may not receive the advertised interest rate. Down payment covers closing costs. When buying a home with a mortgage, there's always talk of down payment, which for most buyers is a large chunk of money paid up front and ultimately lowers the final amount of mortgage loan. But while there is a large down payment, it does not cover closing costs. Closing costs are the processing fees paid to the lender in exchange for creating and finalizing the loan. They are due when you close on the loan, but they are separate and independent from the down payment. Closing costs can range from 2% to 6% of the total loan balance. Buyers do have the option of negotiating with seller on closing costs, but it's never a guarantee, and some locales limit the amount a seller can contribute. As you're looking for homes and understanding the mortgage process, remember to account for closing costs in your calculations. Mortgage loans can be confusing and intimidating, especially with the number of myths out there about them. If you still have questions, your agent can help or refer you to somebody with more knowledge. They may even have a lender they've worked with and can recommend. Buying a home with a mortgage loan is still widely popular throughout North America. Don't let the myths fool you out of achieving the goal of home ownership. It's a new year, and home and properties are available all over North America. You can check out the local real estate market at my website, CynthiaSellsTampaHomes.com. If you're thinking about buying or selling this year, don't hesitate to contact me with your questions. I'm always happy to help.